It was a busy week this week. The Fed came out and raised interest rates 0.25%, which is exactly what we expected, but also came out with somewhat of a mixed press conference, which the market interpreted as being dovish. Personally, I don't think it was dovish. Fed Chair Powell came out and said that they would be data dependent, which basically means every Fed meeting going forward is a live meeting. In other words, we don't know whether or not they're going to raise rates in the next meeting. However, the markets took this as positive and rallied. On Thursday, the Bank of Japan, which desperately needs a public relations specialist like me, came out and freaked the markets out into thinking that they were abolishing yield curve control. Japan has had a unique economy for decades now. Where the rest of the world is worried about inflation, Japan has been suffering from deflation. In order to combat this, the Bank of Japan has been doing what's called yield curve control. And what this means is the Bank of Japan buys and sells bonds in order to keep the interest rates on their bonds low, thus spurring inflation, not deflation. This strategy hasn't really worked until recently, and they've been doing it for decades. And now that inflation is in their system, they're getting a little bit more concerned. So when they came out on Thursday and kind of erroneously suggested that they were going to dramatically adjust yield curve control, everybody freaked out and all stocks sold off. Overnight on Thursday going into Friday, it appears that the BOJ finally had their communications people kick in and clarify the message, that they were just slightly adjusting it. They weren't doing anything dramatic, and then stocks rallied on Friday. So naturally on Thursday, all the bears came out and said that the stock market was going to collapse. And then on Friday, all the bulls came out and said the bears are wrong and the stock market's going to skyrocket. So what do we have to look forward to next week? Well, now that we're beyond all of this central bank stuff, we've got some very interesting earnings reports. 158 of the S&P 500 is reporting next week. And we have some big ones with Amazon and Apple in the tech space, but also Caterpillar and Starbucks in the other industries that are the leaders in the space. So there's a lot of potential catalysts that could move the market either way. Additionally, the July jobs reports come out on Friday, and if the economy is weakening in any way, then that might freak the markets out. So right now, we're only looking at earnings reports as catalysts, but there's always the possibility that there could be a surprise news event that sends the market one way or the other. So you have to keep your eyes peeled for that. Taking a look at Bitcoin, as you can see, I suggested that as we approach this green parallel channel that we've been using for a couple of weeks, it could be a catalyst to either the upside or the downside. But I also said that this looked like bearish price action to me. And it turns out that was right. You might remember that I mentioned that I thought if Bitcoin broke through the weekly low here, that it would also break through the monthly low. I didn't think they would hold. If one broke, both would broke. And that also ended up being the case. So when Bitcoin broke down on Monday, you can see that it hit this other parallel channel, the bearish red parallel channel that we've also been using, and it's found support. As I suggested might happen, I thought there might be support around 29,000, and it ended up bottoming here, down at $28,870. So that's now our new support line. If Bitcoin ends up breaking below that, we will see it fall even further. If we go back in the past, you can see that there's a lot of key price action in the past where it might also find support. So maybe around $27,250, or maybe even at the midpoint of our parallel channel here, which is around $26,400. Also a key point of support that we've been tracking in the past. If Bitcoin ends up rallying from here, it will now treat this parallel channel that had previously been bullish support as resistance. So I would predict we'll see resistance around the 30,100 mark if it does rally. Bitcoin is always a mysterious beast, and it's hard to predict whichever way it's going to go. News catalysts often have no effect. It all depends on which way the whales want it to go. If they want Bitcoin to go up, it will go up, even in bad news events. However, if the whales want it to go down, and it seems that that's what they want right now, Bitcoin will see lower lows. And even though the bulls believe there are going to be a lot of buyers in here, there's nothing positive on the macroeconomic space right now for Bitcoin. Bitcoin is a risk asset, and given that it's weak in light of the fact that tech and the rest of the markets have been rallying, is not a good sign. If the stock market rolls over and Bitcoin's already weak, it could sell off to lower lows. Over in my investments in play portfolio, this week's winner was Canopy Growth Corporation, which popped 22.7% on the back of really no news. It's important to remember that Canopy Growth is now a penny stock, which means it takes very little to move this stock in massive ways. So I don't actually consider Canopy this week's winner. It could easily give back all the gains that it got this week and then some next week. It could end up being next week's biggest loser. For me, the real winner this week was Boeing, which popped 12.7% on the back of a really good earnings report. Boeing surprised to the upside, and this is one of the biggest cash flow stories out there. Boeing came out and blew away all of the estimates and gave really good forward guidance. It's important to remember that Boeing is one of only 2 companies that make airlines, which means it's an oligopoly. Even under weakness, Boeing is one of the only 2 companies that do this, and it's not an easy space to get into. This week's loser was Coinbase, which pulled back 6.01% on no news, really. However, since Bitcoin was weak, that's possible. Also, Coinbase had seen such a rally going into this week that some of this could just be profit taking. And even though Coinbase hasn't reported yet, and it might blow away earnings expectations, it is closely tied to the price of Bitcoin. So if Bitcoin continues to see weakness, so will Coinbase. Over in my speculation portfolio, the AI craze is taken over once again, and Palantir is this week's winner, gaining 8.4% as investors pile back into AI and speculative tech when the good news hit throughout the week. As I've said before, Palantir is one of my favorite plays for AI and going into the long term in general, but this one has rallied significantly off of its lows, so be prepared for more volatility ahead. Golden Minerals once again. I'm not even sure what I can say about this stock. It has been the biggest loser for 5 of the past 6 weeks. This company has figured out so many ways to destroy value, I have no idea what else they could do. On virtually no news, Golden Minerals dropped another 13.48%. It made new all-time lows, and there's just no hope for the stock. It's just going to keep being the loser over and over again. JP Morgan and the rest of the money center banks and even the regional banks continued to rally this week, so I had to take more profits. As I said a few weeks ago, JP Morgan is one of 4 positions that I hold in a single allocation that I refer to as my financial basket. And JP Morgan has far exceeded the allocation size for one of the 4, which means I have to keep taking profits when it keeps doing better and better. My sale went through on the 24th at $158.69 and locked in 6.84% in gains on shares that I bought for $148.52 back on June 18th of 2021. This lowered my per share cost over 15% down to $50.10. From here, I will take additional profits in JP Morgan if it continues to rally, with my next sell target at $166.70, just below a point of resistance that JP Morgan has seen several times in the past. And my next buy target is $102.26, slightly above the low that JP Morgan saw last year. I'm not going to buy any higher than that because it is still such a significant portion of the financial basket. There's no reason for me to add to it, but I do believe in JP Morgan for the long term. If this video helped you out, please give me a thumbs up. It really does help me out, and I'll see you in the next video.